Hello, and welcome to Vietnam Connexion Weekly, your trusted source for insightful, beyond-the-headlines updates on Vietnam's economy, politics, and society. Here are this week's top stories that are shaping Vietnam's trajectory on the global stage. Our top story this week: a high-stakes trade deal between the United States and Vietnam has sent shockwaves through international markets. On July 2nd, President Donald Trump announced that a new agreement had been reached with Vietnam. Under this deal, a 20% tariff will apply to many Vietnamese exports to the U.S., reduced from the previously proposed 46%. Goods deemed to be transshipped, routed from third countries through Vietnam, will face a 40% tariff. In return, Vietnam will provide full market access to U.S. companies and remove tariffs on American exports, particularly large engine vehicles. Vietnamese President To Lam, in a phone call with Trump, requested that the U.S. recognize Vietnam as a market economy and lift high-tech export restrictions, a long-standing demand from Hanoi. Despite President Donald Trump's announcement that a trade deal has been finalized, officials in Hanoi say negotiations remain ongoing and final details have yet to be settled. For U.S. businesses manufacturing in Vietnam, especially in footwear, apparel, and electronics, the 20% tariff, though steep, is seen as a reprieve from the looming 46%. Vietnam has grown into the second-largest supplier of these goods to the U.S. and a vital player in companies' strategies to diversify away from China. This is a much better outcome than a flat 46% tariff, but I wouldn't celebrate just yet, said Dan Martin of Deason Shira and Associates. For U.S. consumers, prices on everyday items like sneakers, t-shirts, and electronics could rise. Retailers say it's still a hit, but better than expected. Investors in Vietnam's stock markets see the 20% tariff as good news, according to Tu Nguyen, Deputy CEO of Vina Capital Fund Management, who expects to see more technology companies listing in Vietnam. Vietnam stocks have rallied to a 3-year high as trade tensions shifted to other Asian nations facing higher tariffs. Vietnam currently holds the first-mover advantage in Asia. The 20% tariff puts it ahead of regional rivals such as Thailand, Malaysia, and Indonesia, who received letters from Trump raising their tariffs from 25% upwards. From a global perspective, perhaps the most interesting point is that this deal again seems in large part to be about China, especially the 40% rate against transshipment. If the U.S. interprets transshipment strictly as products that are finished in China and shipped to Vietnam to be relabeled as Made in Vietnam, then it will help to improve the quality of Vietnam's export sector in the long run, because these transshipments hardly add any value to the Vietnamese economy. Vietnam's trade ministry is working with businesses to respond to tariffs, including improving product quality, Thang said. This is an opportunity to increase added value and to shift to high-tech products. If the U.S. interprets this broadly, targeting any product with Chinese components, the implications could be severe. Vietnam's supply chain is deeply interlinked with China. Components like zippers, buttons, fabrics, and even electronics come from Chinese suppliers. It remains unclear exactly how the 40% levy will be enforced, but transshipment is notoriously difficult to trace, and a crackdown on Vietnamese goods that contain a significant proportion of Chinese components is arguably unrealistic. Raw materials from China are the lifeblood of Vietnam's manufacturing industries. Beijing sees the transshipment clause as a thinly veiled attempt to isolate Chinese goods. This raises concerns for Hanoi, caught between its largest trading partner, China, and its largest export market, the U.S. Bloomberg Economics forecasts that Vietnam could lose 1/4 of its exports to the U.S. in the medium term, endangering more than 2% of its GDP as a result of the agreement. In short, the Trump-Vietnam deal is a mixed bag, a temporary lifeline for businesses and a signal of Vietnam's rising role in global supply chains. But with the transshipment issue unresolved and China on alert, the road ahead could be bumpy. The second story brings us a mixed picture of the economy. Vietnam General Statistics Office reported on July 5th that the economic expansion in Q2 of 2025 was 7.96%. For the first 6 months of 2025, the growth rate averaged 7.52%, which is a record high in the period 2011 to 2025. The service sector grew by 8.14%, while the industry and construction sector increased by 8.33%. The tallies for the agriculture sector and the forestry and fishery sector were respectively 3.84% and 5.59%. Vietnam's trade surplus was $7.63 billion in the first 6 months, lower than the same period last year. $12.15 billion. Total trade turnover was $432 billion, up 16.1% year-on-year, of which exports and imports rose by 14.4% and 17.9% respectively. On average, in the first 6 months, the CPI increased by 3.27% compared to the same period last year, with core inflation hitting 3.16%. Registered foreign direct investment, FDI, in Vietnam hit over $21.51 billion in the first 6 months, up 32.6% and a record high since 2009, while dispersed capital reached $11.72 billion, up 8.1% according to the Foreign Investment Agency, FIA. However, Vietnam's manufacturing sector in June experienced the sharpest fall in new export orders for over 2 years, according to a report released by S&P Global Market Intelligence. The S&P Global Vietnam Manufacturing Purchasing Managers Index dropped to 48.9 in June from 49.8 in May, staying below the 50.0 mark for the third consecutive month. This signaled a modest deterioration in business conditions as the first half of the year drew to a close. Andrew Harker, economics director at S&P Global Market Intelligence, said June saw a worsening of international demand for Vietnamese manufacturers as the impact of tariffs intensified. Our next story is about Vietnam's most historic administrative reform in the last 40 years. On July 1st, Vietnam officially announced the nationwide implementation of the new 2-level local government model. Nationally, Vietnam has merged 63 provinces into 28 provinces and 6 centrally governed cities: Hanoi, Ho Chi Minh City, Hai Phong, Da Nang, Can Tho, and Hue. Within each province, the district-level administration has been completely eliminated. The commune-level governance units have been reduced from 10,035 to 3,321 nationwide. Many cities have expanded in sizes due to the change. Da Nang has replaced Ho Chi Minh City to become the largest city in terms of landmass. Ho Chi Minh City has become a megacity by merging with 2 adjacent provinces. It now has a total population of 14 million inhabitants and contributes over 24% of national GDP. What are the reasons for this massive reform? Reduce redundancy and overlapping functions between provincial and district levels. This reduces red tape and speeds up decision-making processes, brings faster policy implementation, and improves public service delivery. Merging provinces can create larger, more economically diverse and connected regions, unlocking more potentials for greater investment, promote infrastructure development, and foster regional economic growth. By reducing the number of administrative units and personnel, the government aims to significantly cut administrative costs and reduce the burden on the state budget. Redirecting resources from administrative costs towards social services like education and healthcare, as well as public sector salary reform, is another goal. According to the Ministry of Home Affairs, this restructuring process is expected to cut nearly 250,000 public sector positions and save around 190.5 trillion VND in salary and administrative costs between 2026 and 2030. Additionally, over 4,200 surplus government office buildings will be prioritized for conversion into schools, hospitals, and cultural or sports facilities to benefit the community. Vietnam's future is being built now. It is not just restructuring its bureaucracy. It is redefining how the state works, how power flows, and how growth is delivered. For Party General Secretary To Lam, this is a legacy-defining move. In tandem with the new administrative reform, Vietnam has approved amendments to its nationality law, permitting both Vietnamese citizens living abroad and foreigners to hold dual citizenship, as part of efforts to attract more skilled workers to the country. For foreign nationals and stateless persons who have a Vietnamese spouse, child, parent, or grandparent can now apply for Vietnamese citizenship without needing to live in Vietnam for 5 years, language proficiency, or financial requirements. The relaxed conditions also apply to foreigners who are recognized for their special contributions or proven benefits to the country. Vietnamese leaders see advanced technology as the key to progress, but the country is currently lacking individuals with cutting-edge experience in science and technology. The change in nationality law is seen as the first step in attracting more foreigners to live and work in Vietnam. According to a report from the State Committee on Overseas Vietnamese, there are approximately 6 million Vietnamese living in 130 countries and territories, with 80% residing in developed countries. A significant number of Vietnamese abroad are working for major tech companies, such as Google, Meta, IBM, and Microsoft, and are heavily involved in science, technology, and finance. On June 30th, Mr. To Lam, the General Secretary of the Communist Party, said, "I urge overseas Vietnamese to return to their homeland, reconnect with their roots, support each other, and engage with the people in the country to make Vietnam stronger." He added, "The homeland is always open to welcome citizens far from home to work together in building and developing the country." Historically, foreigners living in Vietnam face various restrictions, including stringent visa requirements, limited access to real estate, and restrictions on banking services, such as stricter requirements for opening bank accounts, accessing home loans, or obtaining attractive interest rates for savings accounts. These changes in citizenship laws aim to make it easier for foreigners to live and work in Vietnam. That's it for this week's Vietnam Connection. If you found today's updates informative, hit like and subscribe, or drop us a comment. Your feedback helps us bring you sharper, smarter stories each week. See you next time.